Hello and welcome. You have tuned into Buy Now, Sell Now and ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will open the stage to get your queries answered. But before that, a quick look what the markets are up to. So Cheryl, the second day, what we are seeing is that no particular trade or no particular trend actually on the index level, but a lot of sector-specific action. Because for today, I believe it's the cement pack that is holding strong.
Yes, absolutely. A very good morning to you, Shrishti. And yes, cement pack is also holding strong on the back of that CLSA note that has come in, which has indicated that they've gone ahead and taken a price hike in the quarter, in this current quarter that we are in. So that's one of the reasons why you have the entire cement pack that is actually a buzz in trade today. But if you talk about the indices, we've seen a smart recovery from the day's lowest point for the benchmark indices. However, you have the Nifty Bank that is in the negative territory. Take a look at the advanced decline ratio, and that at this point in time is tad bit tilted in the favor of the gainers. Talking about the gainers, then, like Shrishti mentioned, is the cement pack that is a buzz in trade today. So you have Ultratech Cement that is the top gainer on the Nifty, up 2%. You have Britannia, Grasim, Nestle, BPCL among the other set of gainers. While on the flip side, it is Adani Post that's seeing mild bit of loss of about 0.8%. That is your top loser in the Nifty. JSW Steel, HCL Tech, Adani Enterprises, as well as ICICI Bank are the other set of losers. Talking about sectoral indices, then the picture there is also pretty fine, because if you look at the losses, you only have the PSU Bank Index that is the top sectoral loser and is seeing mild loss of about 0.2% or so. Energy Index is barely in the negative territory, while on the flip side, it is the Metal Index that's still a buzz in trade, is up about 0.8%. Auto is seeing good moves. You have the broader markets also holding on to strong gains. So that's the way how the markets are looking like at this point in time. Looks like December no working zone or no working mode is on for the markets as well, actually, Shrishti.
Seems like, but let's see that how the markets pan out. But indeed, yes, Cheryl, the festivity is all around because it's December, so we are just gearing up.
It's year end as well.
Yes.
It's so fast that we've come to the end of the year 2024. And the markets have actually thrown a lot of surprises at us as well.
Well, certainly this year has been a roller coaster for the markets as well. But nevertheless, we do have a lot of queries that are already started pouring in from a lot of our viewers who are regular watchers as well. But if you are watching it for the first time, viewers, you can connect with us live on a WhatsApp number that will be flashing on the screen, on the top of your screen as well. Throughout the show, you should tell us your name, the stock that you have invested in, the stock you wish to invest in. Tell us the buy price as well as your holding period, and that way our experts can help you the best way possible. But with this, let's move on, viewers, and let's start taking your queries. But before that, let me welcome two of our very special guests. We do have Rajesh Agrawal joining us on the fundamental side, as well as Himen Kaparia is joining us to guide us technically. Both of them hold a very rich and a long experience in the markets. So let's get started then. And the first query that I have is coming in from Lakshmi. And Rajesh, let me take it from you. A very good morning. Lakshmi is holding 100 shares of Oil India. Buy price is 537 rupees, as well as NTPC, 25 shares at a price of 432 rupees. What's your take, Rajesh? Both of these are hold at these levels as well, or look for some other stock?
Good morning, Srishti. Good morning, Shreya. Good morning, Himen. I think both are a hold at this point of time. Taking one by one, Oil India, fundamentally very strong stock with good reserves. The only problem is crude is languishing below $75 odd from a very long period of time. And this is the main concern for companies like Oil India or ONGC. But going forward, I think with the kind of assets it has, if you are not short of time, I think one could continue to hold. And as far as NTPC is concerned, it is one of the largest player in power, I would say, and the kind of power demand we are witnessing across the country, and with the kind of expansion this company is going on with, I think it's a buy at this point of time. Maybe a target of 450 odd rupees in the next 1 year is quite possible. So any dip should be taken as an opportunity to buy.
All right, that's the take coming in from Rajesh. Very good morning to you, Rajesh, as well as Himen. Thank you so much for joining us on the show. Let me take the next query then. This one is coming from Vijay. He wants to know about Cipla or Dr. Reddy's. Which one of these should he look to accumulate at current price for a period of 1 year? Himen, a tough one for you?
A very good morning to you, Cheryl, very good morning to Srishti, very good morning to Rajesh. I think in terms of Cipla and Dr. Reddy, the setup, Cheryl, is slightly different in the sense that uh, Cipla is corrective. It's in an intermediate correction and we have cooled off. Dr. Reddy is in a similar correction, but from a longer term point of view, I believe Reddy looks relatively better. So I would say the recent low of 1170 as a stop loss. So from a 1 year point of view, I think Dr. Reddy looks better.
All right, moving on to the next query then, and Hemane, good morning. The next query is coming in from Vidya, and she's a short-term trader, is what she's highlighting, in holding shares of Titagarh Rail at an average price of 1195 rupees. She is indeed at profit in this one, but is this a right time to book out profits?
No, I think Shishti, she can hold on. In fact, there's been a mini breakout at 1250, and that has actually happened today, though the week is not yet over. So some resistance at 1349, but otherwise, Shishti, we are heading towards 1380 or so. So I would suggest hold. Just for safety's sake, she can keep a protect profit at 1250. If that breaks, she can exit.
This one is coming in from Bhushan from Pune. Wants to know about AB Capital. If it's a good one to buy, he's looking to buy and hold for the medium to long term. Rajesh, what's your take on AB Capital? Because this one actually has been a top favorite when you talk about Nuresh or Kunal over the last 1 to 2 years. You would have heard AB Capital a couple of times. But what's your take on AB Capital? How is it fundamentally? And do you think now is the right time to enter for the long term?
See, fundamentally, it's a very strong company, no doubt on that. Although it has underperformed the market from a very long period of time, but the fact remains the fundamentals are very strong. The company has been doing well. Almost all the verticals, be it the insurance, be it capital market, mutual funds, everything is doing well. I think one can go long in this stock with a time horizon of at least 12 to 18 months to get some meaningful return. So yes, it's a buy from our side.
A buy coming in on AB Capital, but moving on to the next query then, and this query is on Tata Power, wherein Nikhil Sharma is having 40 shares of this stock from a price of 488 rupees. He's indeed at a loss right now, but should he like book out the loss at these levels or continue to hold for long term?
I think it's a clear hold from a longer term point of view, Srishti. Brilliant run up. We are naturally going to get tired and walk into an intermediate correction, which is what is happening. But this has taken almost 10 months. So I believe a significant portion of the correction is done with. Yes, long term, I would assume it's 2 years or more. Technically speaking, consolidation, but it's a correction, a bull market hold.
All right, so that's the take coming in on that counter. Let's take the next query that I have is coming in from Rajashekar, writing to us from Chennai, and wants to know about some stocks that he's holding for the last 2 years. One is LTI Mindtree, 92 shares at a price of 6,748. The other one is L&T Technology, 60 shares at a price of 5,395 rupees per share. Wants to know what's the medium term view for both of these counters, and also he's thinking about actually investing in Tata Tech. What's your take on this, Rajesh? How are both of these L&T companies looking to you, and is Tata Tech a good bet for for a fresh investment?
See, both these L&T companies are good. They have seen good order inflows. One of them is after the merger has been doing very well. Long term seems to be very good, but at this point of time, I think nothing good would be happening in the very short period of time because of various reasons. Infosys, TCS trading at a very better valuation, but still, if you are holding it, continue to hold. And as far as Tata Tech is concerned, it's a very good buy at this point of time. After the listing, which was almost a year back, 1400 were the levels which we have seen, and it has corrected to almost 900 odd rupees. Strong fundamentals catering to auto sector, basically into education also. Previously, they were dependent on only Tata Motors for their products. Now they have diversified their client base, diversified their product range. I think this company has done underperformed the market for a very long period of time, despite the fact the fundamentals are very strong. If somebody has a time horizon of maybe 12 to 18 months, I would say go ahead and buy for a target of 1200 odd rupees.
All right, 1200 is the possible target coming in on Tata Tech. But Rajesh, I'm coming back to you because Satya wants to know about New India Assurance because he's holding the share from a price of 265 rupees. First query is that should he average or can he average at current levels with respect to this particular holding, or would you rather suggest to switch to Star Health for the next 1 year?
See, for next 1 year, I will say stay put with New India Insurance. Company is doing very well. The correction which we have witnessed just because of market condition, otherwise it has been doing very well. The numbers have been good. Valuations are attractive. One can even add to New India Insurance at this point of time. I would like to add that if you have to put some new money in the insurance sector asset, why not go for LIC, which is doing very well. The numbers have been good. They're launching new products, and at 900 odd rupees, you have a target of 1200 in the next 1 year. So that would give a better return than going for Star India or adding New India Insurance at this point of time.
And here's a note for all of our viewers then. In our 10th edition of India Economic Conclave, you will see a whole host of speakers from across the sector speaking on various topics that will help us or help India fast track to the top 3. We have over 50 speakers who will be sharing their thoughts on the stage of IEC. One such India in Honcho is Ajay Piramal, who is the chairman of the Piramal Group, who will share his insights on the India growth story as a sneak peek.
India has demonstrated exceptional economic resilience at a time when the world faced consecutive Six Sigma events like the pandemic, 2 major wars, heavy global inflation, and a shaky world political order. We have come a long way from being classified as a fragile nation to being an oasis of growth. But there are many parts in India which cannot be seen through the same lens. In fact, India is a tale of 3 different countries, 56 million affluent Indians, the second 1.2 billion mid-income and aspiring Indians, and 196 million economically weak Indians. To ensure sustainable growth, economic development of all these 4 income classes are necessary simultaneously. India's Human Development Index ranking is 134 out of 193 countries. However, some of the backward states have a ranking similar to some of the most poorest countries in the world. Our government, along with the corporate sector, have been working tirelessly to address this issue. As a result, today, only 16% of our population is exposed to multidimensional poverty compared to 56% in 2005. But a lot more needs to be done across the country on an urgent basis. I look forward to an enriching discussion on inclusive growth and development benefiting the entire length and breadth of our country.
Queries, then we do have both of our experts with us, and the next query that I have is coming in from Manoj. And Rajesh, if you can advise Manoj on DB Corp, because he's holding 300 shares, his buy price is 350 rupees, though the stock is doing decently well, but otherwise, how do you see the future of the company as well as what to do with this investment?
Levels, I don't see much of an upside from these levels because whatever has been in the fundamentals has already been discounted. It's better to switch to some other counters at this point of time, maybe Lloyd Metals or IRCTC or even uh, Geo FinCorp for a long term would be a better pick.
This next one is coming from Jay. He's writing to us from Mumbai. He has about 1,000 shares of Hindustan Copper purchased at about 350 rupees per share. Technically, how is it poised is what he's asking, Heyman, and can he hold for the next 1 year?
Yes, Cheryl, I think we have entered a correction in a bull market. We have been corrected for the past 6, 7 months. We're probably in the last stages of this corrective phase, but yeah, succinctly put, you can hold for the next 1 year. You can probably hold for the next 2 years also. Cheryl, nothing to worry.
All right, that's the take on Hind Copper. But once again, Hemain, coming to you, this query is from Raman from Chennai, and he wants to know that is SBI Life Insurance a good buy from current levels, and positionally, what's your take? Can he hold this for the next 1 year, and where do you see the stock headed?
Frankly speaking, we've entered a corrective phase, but the setup is good from a longer term point of view. Short term fallen off a cliff, 1940 to 1400. It's not exactly short term, but yeah, the last 4 months it's been very bad. Gold as of now doesn't look that exciting. Yes, the downside seems to have been halted for the time being simply because there is strong support at lower levels. So gold as of now, nothing exciting. Things should start looking up above 1520, and this is the case with most of the life insurance companies actually.
Right, this one is coming from Raji. He's writing to us from Mumbai. He has about 1,000 shares of L&T Finance that he bought at around 140 rupees per share. Medium term target. How does it look technically on the charts today, Rajesh? I believe you have to wait longer than expected for us to come to you for a query because we have so many technical queries. Heyman, what's your take on L&T Finance?
Hold. Things should start looking up on a weekly closing above 156. Short-term bottom in place. If you have a longer-term view, I think there's absolutely no cause to worry. But yeah, things above 156 should be better. Yeah. So medium-term target, I believe, would be something around 162, 164. Yeah.
All right, that's the take on L&T Finance. But Rajesh, coming to you for the next query. This one is coming from Sushil Kumar from Chennai, and he wants to have your advice on IDFC First Bank holding 5,000 shares. Buy price is 76 rupees. Actually, Rajesh, is looking out for an advice in the short term as well as in the long term. What is the outlook of the company?
See, despite the fact that the numbers have been improving from the last few quarters, asset quality has improved, bottom line has improved. We believe that almost everything has been discounted in the price at such maximum it go in the near future is to 70 to 73 odd. There are better choices in the banking sector as such. Maybe in the private sector also you have better names like HDFC or a Kotak or even a Axis trading at a very good valuation. Even IndusInd Bank, after the kind of cut it has witnessed, I think at price to book of 1.2, IndusInd is giving a good opportunity. It's better to switch, at least if not full, some part of your holding it through these names.
All right, on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, more queries on the other side. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. We just took a query some time ago of our viewer, that is Raman. I believe it was on SBI Life, yes, and he wanted actually a fundamental view. We got him a technical view, and guess what, Raman? Looks like it's your lucky day because we are getting you a combo view of SBI Life. What's your view on this one, Rajesh? How is this one looking to you fundamentally, given the fact that we just had the life insurance premium data, and in fact the non-PSU the non-PSU ones have not done that well, isn't it? Oh, sorry, the PSU ones have not done well.
They have not done well, be
Yes,
it
yes.
SBI or ICICI Pro or HDFC, they have all underperformed. And at this point of time, too, I strongly believe that LIC, being the market leader and on valuation parameters too, it's on a better footing than SBI Life. But yes, I don't disagree that SBI Life is also a good company and having strong fundamentals, but the kind of growth you will have in LIC would be phenomenal. I think LIC is a better pick, although one can even buy SBI Life. Their numbers have been also good. The ratios have been better. I think in the last 2-3 years, it has been growing well with the kind of franchisee and with the kind of backing of SBI. They have whole positive view for selling their products in their branches. So I think both of them are good, but given a choice, I would go with LIC.
All right, that's the combo view coming in on SBI Live. But moving on then, and this one is a very interesting query coming in on Tata Steel and Himen. You will be surprised to know that Mr. R.J. Rao from Trichy has been holding over 1,000 shares and his buy price is just 37 rupees. Even me and Cheryl was just checking that when was it that we have seen Tata Steel at these levels, and my guess is that during COVID times, yes, this was indeed the price. But what to do now, Himen, is the question, because this is the only stock in his metal portfolio is what he's highlighting. So stay put with this one or look to exit this and rather invest in some other sector or stock.
I would say hold Vedanta looks better, but a 6-month correction has just in all probability exhausted itself, Shrishti, as far as Tata Steel is concerned. So hold on, 1 rupee paid up stock. Don't expect fireworks. Heavy F&O stock above 153.5 cash market levels. Things should start picking up. There's nothing wrong with the stock. We are positive on the long-term charts. We had a big correction coming in, which is almost over. So hold.
All right, hold is a call coming in for Tata Steel. This one is coming from Kiran, writing to us from Pune. Wants to know what Jindal saw 500 shares at price of 345 rupees per share. Wants a 3 to 6 month view. Stay put or invest in some other counter. Heyman?
Shall, as far as General Saw is concerned, I think we are in a range between 290 and 340 on the upside. We've had a phenomenal run. The stock has gone from 40 to 390 over the last few years. As of now, it looks like a hold. But if it closes above 340, I mean, we were above 340 just yesterday. So if it closes above 340, I believe it should be gravitating higher upwards. So hold as of now. Safety's sake, if 290 breaks, I think the medium-term technical picture would then get spoiled.
All right, then moving on, and Rajesh, I'm coming to you for the next query. This one is from Santosh, writing to us from Muscat. Wants your take on two of the stocks. One of them is Federal Bank, bought at a price of 42 rupees, holding 720 shares here. And the other one is Indian Hotels, bought a total of 125 shares. Buy price is just 111 rupees. So what's your take on both of these stocks? Is that a hold or sell?
First of all, congratulations on setting on such kind of profits, and this proves long-term investing. It's a buy. Both of the counters are buy from our side. Federal Bank has been doing very good. The numbers have been very good. Gold loan is doing well. Asset quality is improved. I think Federal Bank is one of the banks which can give very good returns in the medium to long term. And as far as the Indian Hotels is concerned, belonging to the Tata Group, having good room inventory, going for expansion, although they have taken some new hotels internationally also. With the ARR, average room rent, going up and the availability going down, I think hotels are in a sweet spot. Indian Hotels being one of the best in that industry, I think it's a buy from a side for a target of 1,200 or in the next 2 years. So, of course, if you have liquid money with you, you can invest in Indian Hotels at this point of time. Otherwise, you can continue to hold.
Right, so that's the take coming in on Indian Hotels. On that note, thank you so much, Heyman, as well as Rajesh, for being part of the show, as well as resolving all of our viewer queries. Thank you so much for being a part of the show once again. But shifting focus then, shares of Adani Ports are in focus on the back of group's clarification saying that they will no longer seek funding from the United States. Instead, the company or the group plans to use its own resources to fund a Sri Lankan project. In an exchange filing, APSEZ said that the commissioning of the Colombo West International Terminal is poised for some time early next year. The company said that it has withdrawn its 2023 request for financing from the U.S. International Development Finance Corporation. As the project nears completion, Adani Ports, which holds a 51% stake in the venture, decided to proceed without the DFC's funding.
If you like this video, then like, share and subscribe to ET Now.